Thank you, Peggy. Good morning, good afternoon. I'm excited to be here today to talk to you about what's coming for the future for Phosphate Specialties. But first, let's talk a little bit about what's going on right now to give you a little bit of background in our Phosphate Specialties business. So first, let's talk about who we are and where we are. You'll notice from the slide behind me that we truly are a global player in the Phosphate Specialties market. Not only do we have sales and marketing and innovation and distribution around the world, like some companies do, but we have meaningful assets on the ground producing in every major geography around the world. And you'll also notice on this map that we have a substantial market share in every market around the world, which leads us to an overall 20% or so market share on a global basis. And you might notice that China is at 10% and think that's low, but actually that's coming from being at almost zero 5 years ago, where we made our first real entry into the China market. So we've had substantial growth in that market in the last couple of years. Next, let's talk a little bit about the competitor landscape. And again, you'll notice on the slide that ICL is the only company showing up around the world with a true geographic presence. If you look in each region, like North America, we have regional competitors like Innophos in North America, Prayon in Europe with a small presence in North America, and the Chinese players only produce in China and export. And it's also worth noting when you look at that list of phosphate specialty companies, we're the only public company in that list. Now let's talk a little bit about where we've been. If you look at our results over the last few years, we're coming from about $150 million worth of EBITDA in 2019 to over $200 million in 2021. And if you look at our trailing 12 months, we're at over $350 million on a little over $1.3 billion worth of revenue. So next, let's talk a little bit about what we've been doing. Well, you can see substantial growth in the last couple of years, starting from 2019 at about $150 million worth of EBITDA on $1.1 billion worth of revenue, and moving to, in 2021, about a little over $200 million EBITDA on $1.3 billion worth of sales. And during that period of time, the market CAGR was about 2%. And when we talk about the market CAGR, we're talking about a combined acid, salts, and solutions that our products go into. And that CAGR has been pretty consistent for the last 15, 20 years, close to GDP at 2%. And we're expecting a huge transition in that market in the next several years, primarily because of new demands, large demands that are being generated out of the battery and EV markets, shifting that from a global market CAGR of about 2% to well over 7%. And so that brings us to new targets that are over $600 million worth of EBITDA and about $3 billion worth of revenue. And why do we think we can capitalize on that? Well, one, we talked about, we're number 1, 2, or 3 in every key geography around the world. We're vertically integrated with our fertilizer businesses as well. We're the only Western producer with a presence in China, and we have the broadest portfolio of all of our competitors in the market. So how did we do what we've done in the last couple of years? Well, if you look at the last couple of years' growth from that $1.1 million of revenue to our trailing 12 months of over $1.6 billion in revenue, and the EBITDA correspondingly moving from $150 million to over $350 million in that time period, it's been in a number of key areas. One, geographic expansion in South America and China. I mentioned China before. We had a new joint venture in China. In the last couple of years, we've transformed that from really a commodity business, a commodity company, to a specialty company. And that's given us access to completely new markets that we didn't have in China before, and allowed us to grow substantially in the food markets and also those energy and EV markets that have really started in China. We've developed in new industries with new products, like our alternative protein that we talked to you about in 2020, and also with energy and products as critical raw materials into the energy sector in the last couple of years. And all of that has also brought us to a position of long-term agreements. Historically, we've done mainly annual agreements or spot business with most of our customers, but with a lot of the changes and challenges in the global markets, whether they be supply chain or geopolitical issues, the big global national companies that we deal with, whether they're in food, consumer packaged goods, have seen the value of ICL's overall global footprint and us being the most reliable supplier to the market in the last several years. And that's resulted in us moving to more and more long-term agreements. We're just at the beginning of that. We're targeting right now about 25% of our sales in those long-term agreements, multi-year agreements, moving to a place of about 50% there. As an example, most recently, we signed a long-term agreement with General Mills to supply their ingredients for the long term. So how are we going to achieve this growth? Well, if we look at our roadmap for the next 5 years, we're really going to focus on 4 key pillars. 1, the energy markets that we've been talking about. 2, focusing on the high-value markets that we're in today and expanding our share there. Leveraging some of our unique assets that we have that other competitors don't have, going from standard offerings to the most specialized high-purity offerings, and then continuing our long history of innovation and really focusing on innovation in sustainability and functional ingredients. So let's talk about the first one, energy storage, including EV. If we look at this market, again, we started as a critical raw material supplier into the market, and that position as a critical raw material supplier gave us access to a number of things, like insights into trends, demands, access to customers, access to partners, access to suppliers, that created unique conversations beyond being a critical raw material supplier, that have allowed us to evolve to a solution provider and partner to this entire ecosystem. You can't wake up today and read the news without reading something about what's going on in energy storage markets, EV markets. It's everywhere. Every morning, every evening, it's in the news. And you might have recently seen ICL's press releases about this, where I recently had the opportunity to talk to President Biden in the US about what ICL is doing as part of the energy ecosystem in North America. We have a unique opportunity. The government is behind this and supporting it in the US, as many other regional governments are as well. And the most recent announcements we've made about building an over $400 million investment in producing lithium iron phosphate is going to be a shared investment with the US government, where they're going to cost share about 50% of that with ICL. And that's critical because it allows us to move faster and with more confidence in these markets to provide the materials that the downstream customers and partners that we are working with need, to supply the materials into the cell factories, into the batteries that are needed to fuel this new change in clean energy. The next area we want to talk about is our continued expansion into high-value markets. And we'll focus a little bit right now on the food portion of that. When we think about food and the progress we've made in the last several years, it really comes from taking our business and being an ingredient supplier or provider to our customers to being a solution provider for our customers. Moving from just selling them ingredients to adding other ingredients like texturizers, proteins, spices, flavors to provide a full solution for our customers. And I would be remiss if I didn't talk a little bit about alternative protein. Alternative protein, you see it in the news as well. Lots and lots of news about it recently. And our alternative protein business is also behind our aspirations that we talked about in 2020, about 1 year or so behind. And that's primarily as a result of COVID. Food service and menu choices during COVID drove a delay in that market overall. But at the same time, it allowed us to accelerate what we were doing in other areas. We go to market specifically in 4 different areas: meat, poultry, seafood, dairy and beverage, bakery, and vegan, vegetarian, flexitarian options. But what's been really changing a lot in the last couple of years is our ability to improve the affordability of food for our customers, to extend shelf life for them, to help improve food security, to help them enrich the protein content of things they're selling, bring more value to their products, but all the while making sure that they're tasty, appetizing, and also giving them options and alternatives to make their products healthier, like low sodium options and also organic options. So we continue to see good growth in our overall food business as we move from an ingredient supplier to a solution provider. Next, let's talk a little bit about our unique assets that we have around the world Again, we have the broadest portfolio of products, but we also have the broadest capabilities as well, from standard offerings to solutions to ultra-high purity products. So a couple of examples of those unique assets we have. You also see a lot in the news these days about the semiconductor industry, or chips being short in many geographies around the world, and a lot of governments and regions moving to localize their production of semiconductor chips. And we are, again, the only Western producer of high purity phosphoric acid, single part per billion level quality, that is being supplied into those markets. So we have the opportunity to grow along with those, with our long history of being a best-in-class provider to them and growing alongside their needs. And we're also looking to leverage that also into the pharmaceutical industry. We have some of our products registered today, a small portion of that broad portfolio, and we plan to register our entire portfolio to move into the phosphate industry, as there's a large demand in pharma for phosphates. And we're going to leverage also that ultra-pure capacity or capability that we have coming from our knowledge in the semiconductor industry to provide best-in-class, high-purity ingredients for the pharmaceutical market. And last but not least, really, is our extremely robust global supply chain. We've talked about it a little bit earlier, but we really do have regional production in every place around the world, and we use that to back up our production and our supply chain around the world as well. So if there's something going on regionally interrupting a market, we can back that up from another region. We have that flexibility that nobody else has. And so we're going to continue to leverage that as we grow into these new markets and new industries. The next area we want to talk about is innovation, and specifically our innovations that we're working on in the areas of sustainability and really new functional ingredients or solutions. The first part I would talk about there is our paints and coatings business. We have a very specific paints and coatings business that helps improve the durability, sustainability, the stability, adhesion of paint systems for our customers. And we want to grow upon that by introducing a completely new line of products that are more environmentally friendly. Some of this is being driven by regulation, where heavy metals are being taken out of historic corrosion inhibitors, but we're also moving towards low VOC or no VOC, really water-based solutions for these markets that are much more friendly, the existing products. Next, when we talk about alternative protein, we continue to expand what we're doing in alternative protein. We have a very broad portfolio that provides emulsions, texturates, and fiber to the market. And now we're going to give our customers even more options within there to choose the protein of their choice that they want to use in those solutions. We're also making investments in startups in this area. We've made 2 investments here recently, one in Plantable and one in Proterra, both really focused on finding new proteins that are functional, not just providing the protein content or the nutritional part of protein, but functionality in ingredient systems and solutions for the customers, and doing that with natural proteins. And then again, we're also growing our capabilities in managing proteins and stability around proteins in the beverage markets, and specifically Dairy Plus, which we call Dairy Plus, but is really non-dairy dairy applications. And the last area is recycling. We've had a long history because of our broad portfolio of products, from fertilizers to the furthest downstream solution, that provides us opportunities to bring products back into our value stream, whether they came from a solution back into something further upstream or something in midstream. And we see big opportunities for this as the EV markets and battery markets evolve as well. When batteries go to end of life, they'll need to be recycled so that they don't go to landfills. And we think we have unique offerings here that allow the recapture of raw materials, whether those be lithium, phosphate, or iron in the case of LFP, back into our value chain. So where does that bring us over the next 5 years on this roadmap? Well, if you look at the revenue side of things, again, we're expecting to grow from about $1.3 billion worth of revenue to $3 billion worth of revenue in 2027. And on the right-hand side of the slide, you can see that on the EBITDA side, we're going to move from about $200 million to around $600 million worth of EBITDA. And you can see the categories or the areas that we just talked about. We see the largest growth in the ESS or energy storage markets, EV markets. We see substantial continued growth in the food markets as we continue to invest R&D time, money, and energy in this market, so about $60 million worth of growth in food on the EBITDA side. And then those other areas that we talked about, like the semiconductor market, pharmaceutical, and paints and coatings, we expect another $30 million worth of EBITDA growth. And you also see on that chart $130 million worth of M&A activity. We are working very diligently today in all three of those areas, whether that be energy storage and battery EV markets, to make investments that would be accretive to our existing business, and also in the food business and in those other areas of advanced additives, some areas very specifically like paints and coatings. So you can see overall moving from $200 million to $600 million and how we're going to get there. So again, just to recap, 4 primary areas of growth for our roadmap: energy storage, EV markets, focusing on high-value markets like food, pharma, and cosmetics, leveraging our unique assets that we have around the globe, including our global footprint, and continuing our long history of innovation and focusing that primarily on sustainability and functional ingredients. So in summary, we've delivered on what we promised in 2020. We're ahead of that in our trailing 12 months. We're exiting 2020 with extremely strong momentum. We have new growth opportunities that we didn't have in 2020. They weren't in scope or on our radar screen at that point in time, primarily around energy storage in the EV markets. And we think we're extremely well positioned with our global footprint, our long history in these markets, our process capabilities, and our unique assets to really capture the value and outgrow the market and have substantial margin expansion over the next 5 years to reach our $3 billion sales and $600 million EBITDA targets. Thank you for your time this afternoon.